Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video I'm going to talk you through that sort of risk on, risk off sentiment that I discuss. You can see here I've got the stock market and dollar yen, which is going to be what I'm going to be going through this video, just to give you some examples of that risk on, risk off sentiment. But essentially, what is risk on? And risk on is the appetite of investors in the market. Essentially, are they happy to be adding further risk into the market? And typically, when we're in a risk on, you have to excuse the drawings. Typically, when we're in a risk on sentiment, stock markets climb. Okay, so you can see here, stocks to the upside, stocks will climb. Okay, higher interest rate currencies such as the peso. Peso is a good sort of currency to take a look at in a risk on sentiment. Usually this will gain some good value. So if you look at the dollar peso chart, you'll see a nice sort of downtrend on there. And high yield currencies as well, such as the Canadian dollar, the Australian dollar, and Kiwi typically gain value through risk on sentiment as well. Okay, so that's another reason why the Australian dollar has been performing poorly recently. There's been a lot of risk off in the market, which has seen the Australian dollar lose value. But essentially, that's what risk on is. It's the appetite of traders in the market, the people that are putting the big money on. Are they adding more risk to their portfolio, and they see that sort of globally there is okay to sort of add those positions. Risk off sentiment is the opposite. Typically in risk off sentiment, it's due to some kind of global news. Recently we've seen the coronavirus, which is obviously in the sort of started in China, and that is going to affect the Chinese economy, and that's something that's important globally. A lot of countries depend on China's economy, which is seen as a risk-off event. The recent trade deal between the US and China, when there was some talk of that might not even happen and more tariffs were being applied onto China, we saw the market move into a risk-off sentiment as well. So typically in risk-off environments, we see the stock markets decline. Okay, so if I just do a little note over here, I'm just going to do risk off. We see stocks fall, we see them lose value. The stock markets, we see low interest, sort of low yield currencies get stronger. So the safe haven that everyone looks towards really is the Japanese yen. Very low interest rates there, or negative interest rates there, and things that don't typically lose that much value, so gold as well will be one that investors look for. So yen will really gaining value as well as gold in those risk off environments. So it's not necessarily looking at the global news all the time. You can just look at your stock markets to kind of gain that important feel of the market. So typically when we look to the Japanese yen, or look to trade anything to do with the Japanese yen, we take a look at our stock markets and see how the stock market is performing and what we expect. So recently we've had that pullback in here, and that was largely due to talks of the coronavirus spreading X, Y, and Z at the start of the year. Now in that environment then, we expected the Japanese yen, once the stock markets, especially the Dow Jones and dollar yen are quite highly linked together, and as soon as the stock markets start to fall, that's when we talk about that risk off sentiment coming back in, where investors will be shifting their money from the risk assets such as the stock market into the Japanese yen. And what you see here is dollar yen falls in line with that sentiment here on the stock market. Okay, so Japanese yen getting stronger would mean dollar yen moving lower. All right. So vice versa as well, when the stock markets are rallying, then you'd see the yen sell off. Okay, so typically here the market come back into a big support area, as well as around this time the coronavirus seemed to or the news around the coronavirus was very much coming to a halt. There was no real extra news about the coronavirus. There was no updates on deaths or spreading of the coronavirus, which led the market to jump back into that sort of risk on feel, and we saw that move in the stock market higher, and you can see here the yen sold off in line with that. So when you look for that risk on risk off sentiment, it's basically what's going on globally. Is there an appetite for risk? Where are your stock markets? Are they at those key supporting areas? Are they pulling back? If they're pulling back, then it's probably a time to look at your Japanese yen for those buying opportunities on it. Or, you know, if the stock market's rallying, then you look for that sort of long in your dollar yen prices as well. Okay. Another asset that I talked about was the Mexican peso. Mexican peso is a good market to look at in terms of your risk. So very much a risk on asset. And if you actually look at the dollar peso, real nice downtrend out of here. Let's just remove all the drawings off there. Real nice downtrend. Market is in that, you know, risk on environment. And you can see the peso gain value quite significantly. Okay, so take a look at those. Take a look at the video a couple of times. Take a look at your Dow Jones and your dollar yen side by side. Look at how the market reacts. Typically, you'll see the Dow Jones actually move first. Majority of the time before the dollar yen follows. Sometimes they move pretty much in sync. So you can see here the market's back at these highs. If we start to reject this area and the market starts pushing back down, we may get opportunities on dollar yen to move lower as well. If we break out to the upside, then I'd expect to see a little bit of upside out of dollar yen to continue. Okay, so please take a look at that. It'll be good to get your feedback as well. If you have any questions about it, drop a comment below, and I'll speak to you in the next video.